For U.S. farmers, one of the most powerful USDA reports is Prospective Plantings. Released on March 28th, this report gives a first look at the expected planted acreage for the 2024 crop year, and a look back on the previous year's harvest for principal crops like corn, soybeans, and wheat.
In 2021 and 2022, reported intended acreage for corn and soybeans came in below analyst expectations, sending corn and soybean futures more than 4% higher on those days. In February of this year, the USDA's annual Agricultural Outlook Forum provided projections of 91 million acres of corn and 87.5 million acres of soybeans. These figures help create a baseline for market participants ahead of the release of the 2024 report.
Market participants have been closely monitoring the various factors that could impact this year's planting decisions. Concerns over declining prices for corn and soybeans, crop insurance guarantees, and production output from South America, for example, can influence a farmer's planting choices.
The unpredictable nature of agricultural events can lead to a rise in volatility, which can be illustrated by CME Group's Volatility Index, commonly referred to as CVOL. For corn, we see a strong tendency for volatility to rise into the spring and summer months as risk range from flood or drought to a potential freeze. With the rise in volatility, hedgers and speculators may look to utilize CME Group's New Crop Weekly options to help manage some of that risk or take a position. These weekly options trade off the new crop contracts for corn and soybeans, which expire each Friday.
News moves fast, and so can markets. With this year's Prospective Plantings report on a Thursday, the short time frame on New Crop Weekly options can provide a cost-effective way to help gain market exposure and manage risk.